Hi, everyone, and welcome to The Hash, your daily beat on crypto and culture. My name is Naomi Brockwell, and I'm delighted to be joined by our other wonderful co-hosts. We have Ben Powers, Jen Sanasie, Will Foxley, and in today's episode of The Hash, the character of Zack Seward will be played by CoinDesk reporter Danny Nelson. Danny, welcome to the show. It's wonderful to have you here and joining us, and we'll get right into it. We're going to kick off the day by talking about Elon Musk's latest tweet. So he tweets that you can now buy a Tesla with Bitcoin. And he also tweets that Tesla is using only internal and open source software and operates Bitcoin nodes directly. Bitcoin paid to Tesla will be retained as Bitcoin and not converted to fiat currency. That's a lot of announcements in a couple of tweets. So let's unpack that. Ben, I'm going to throw to you first. What are your thoughts on all of this and then operating their own node and all this stuff?
Yeah, I mean, my kind of question here is like, who's holding Tesla's keys and custodying this for them? You know, we were talking about maybe it's the master of coin, maybe it's somebody else, but that was sort of what popped to me here initially. And Naomi, I know you have thoughts on at least the keeping it in Bitcoin and not moving it to fiat. So what do you think is the real value add for Tesla there? Why did that strike you?
I mean, that's a great question. I mean, I do want to into that, but I know that Will is gonna come back at me, so I may just let him go in all at it first. Will, you dive
I want
into
to see
this.
it happen.
What do you think I'm going to attack you for?
No, you're not going to attack me, but you're going to be like, I only have a whole thing, don't spend it. And then I'm going to like come in and like, boom, and give you some facts.
Okay, well, I'll prepare myself for some facts. I think it's awesome. I think that this kind of goes back to an earlier tweet from Elon, I think in like January when they first made the initial Tesla announcement about holding Bitcoin in their treasury reserve. He made the point that crypto is ancient tech, but so is regular fiat, and fiat is just a melting ice cube. So it makes sense for them just to keep bolstering their Bitcoin holdings. I mean, I don't think people are going to take up Tesla on this offer, but I think it's very interesting. They're a very forward-facing technology company, and this is a great move for them. The dorky part of me is most interested in that they are running their own node. I think that's really, really interesting in the fact that we have this public piece of infrastructure that you are not incentivized to run, but they're choosing to do it regardless to maintain the integrity of the Bitcoin network. So you're expending electricity, you're spending time to keep your node running, even though it doesn't give you profit from running a node. Your node only checks that the rest of the network is working as it should be. And ostensibly, they could just rely on other people running nodes to make sure that the Bitcoin network is running correctly and that their Bitcoin is in the right place. But they're choosing not to do that. And I think we're going to see other public companies go that extra step as well and run their own nodes, particularly banks. I think they'll start running Bitcoin nodes and other types of blockchain infrastructure. So that's why I think, Naomi, any fact checks there?
I'm going to agree with everything you said, Will. Why are you doing this to me? I think it's awesome they're running a node too. I think that definitely it's going to move to players like big players in the space to keep doing this as the blockchain gets larger and larger and it gets harder to do so. But I think that's awesome they're doing that. What struck me most from this story is that they're not converting their Bitcoin to fiat. That's huge. I think that's really awesome. We've seen a lot of companies accept Bitcoin, and it's great that they're giving people who use their Bitcoin an avenue to spend it, but then they convert it straight to fiat. So, you know, it's kind of like gets us halfway there. The fact that they're keeping their money in Bitcoin, it makes sense because they've made such a big investment in it. It's also really cool. Jen, what are your thoughts on all this?
Well, a few weeks ago, we spoke about a luxury homeowner, I think it was in New Jersey, who was also accepting Bitcoin as payment for the home should someone want to pay in Bitcoin. And they were offering a discount. So I just want to know the panel's thoughts when we're talking about items like Teslas and other luxury items. Do you think people who are paying in Bitcoin should be offered a discount to let go of their valuable, magical internet money?
I think it completely depends on the company.
Yeah.
I mean, I don't think it's a matter of should, but a lot of people do because, as you said, it is this lucrative thing. And a lot of people don't want the hassle of having to go to exchanges. They'd rather earn it. And so they are willing to take a discount if people pay that. You see that on sites like purse.io. They offer big discounts if you pay in crypto. So there are a lot of different programs out there that do this. And I think we are probably going to see more of them as more businesses start to get involved with this. I'm not sure that all businesses are going to be holding their money in Bitcoin, but we'll see what happens. Maybe Elon's starting a trend here. Danny, what are your thoughts on all of this?
Yeah, I'm really wondering about how this will work practically. Like, let's say somebody bought their Tesla in Bitcoin and they're not happy with the Tesla for whatever reason and they want a refund. Are they going to be getting their refund back in Bitcoin? And if so, like, will they be getting the equivalent Bitcoin as from when they paid, or are they going to be getting even more because perhaps their Bitcoin appreciated or even depreciated? So I don't know if they're going to be very willing to give discounts to take the Bitcoin, because there's going to be so many like just practical challenges that they might be facing as a business trying to make money, which of course is not something Tesla did for a very long time, but they are now. So I guess it'll be interesting to see how this progresses.
That's a great point, and we'll have to see what the small print is when you buy Teslas, whether they give it back in the fiat value or not. I would presume fiat value because, as you said, the volatility of Bitcoin does open up a can of worms in terms of refunds, and they wouldn't probably not want to take on that risk, but I don't know about this. It's also interesting, like we talked about, as you said, Jen, the luxury goods side of this and people spending their Bitcoin. A lot of people scoff at that and they're like, no one should ever spend their Bitcoin, right? We should hold it. And it always amuses me that, we see people trading in and out of currencies all the time. We see people in the DeFi space switching in and out. All of that's a taxable event. Yet people, when it's traded for real world goods, are like, you can't do that. That's a taxable event. And it's like, well, yes, all of crypto is a taxable event. It applies to everything we do. And maybe someone like Elon, because he's powerful, he has a lot of lobbyists. Maybe he's someone who could potentially change these laws for the better and make it treated as a currency rather than a commodity, or at least other cryptos as a currency. So we'll see what happens there. I am hopeful. But Will, what have we got next?
You are so optimistic about Elon's pressuring the SEC. I feel like
most optimistic I've seen Naomi in a while.
Yeah, wow. Okay, we're turning over to blockchain.com, which raised $300 million in its latest funding round. That comes after a funding round a few months back that raised $150 million. That brings the total valuation for the crypto native company to $5.2 billion. So kind of like walking back this story, $5.2 billion is a pretty large valuation. And we can kind of look at some other companies in the space that are as old as blockchain.com. I think that firm was founded as early as at least 2013, maybe even earlier, but Naomi could correct me on that. And they're kind of like Coinbase in the sense that they've been around the block for a while and that they have a lot of fingers in different places. They've been supporting tons of different infrastructure and blockchains throughout the years. And I think they're most well known for their wallet product. They also have some interesting data services and some credit applications. I think, like we were talking about this earlier on the show, before the show started, with Ben, and they're looking to go public, or at least that's the rumor kind of circulating around. I think a lot of people are waiting to see how Coinbase debuts, particularly because of the regulations around crypto companies going public. And Coinbase is kind of like putting its feet in the water, and then everyone else will go out if it's warm enough. So I want to toss this over to Danny because he is
I'm just going to interject before you do that. It was 2011.
Oh, no.
2011 that it was launched.
Those are the facts,
and fun
Will.
fact,
Those are the facts.
I think
Did you look it up?
this is the facts. Well, yeah, I looked it up. And actually, fun fact, it was actually my first Bitcoin wallet, if I remember correctly. And I definitely don't have access to it anymore.
Oh, sad.
Oh, no.
Sad story.
Danny, what's your take on this? Because I think they are going to go public, I bet, within the next 2 years, if not this year.
I mean, they're definitely raising money. Their valuation is soaring. I think there it is, $5.2 billion they're worth now. And this is just another sign of the interest in not only cryptocurrencies, but the businesses that are supporting the cryptocurrency space. Blockchain.com, like you said, has been around for such a long time. It's one of the OGs in the space. and the participation coming so soon after their previous raise of $100 million, now $300 million, it's really showing not only that they're gearing up for the future, but that they're looking for really deep-pocketed investors to help them get there, which is very exciting just from the perspective of someone covering the space.
Yeah, and I think it's super interesting. This goes back to something we've talked about on the show before about, kind of these crypto native firms either getting acquired for high dollar amounts, or we're seeing these huge raises start to happen. And like you said, they've been around for years. They are kind of one of the OGs here. And so this is something we might continue to see. I think this is like the third largest raise ever for a crypto native company. And so, whenever the dollar signs are going up, that does express a lot of interest here. What I think is cool about this in some ways is that, we're seeing all of this craze around NFTs right now, but there's still kind of companies that are not necessarily jumping into that are doing these raises and show like a prolonged sort of infrastructure investment that goes beyond sort of any cyclical elements that we might be worried about the current kind of press cycles and what's grabbing headlines with those sorts of things.
I want to zoom even further out with all of these headlines. We have blockchain.com, we have Coinbase. Naomi, when we hosted that Clubhouse chat, one of the beginner Bitcoiners asked, what's one of the best wallets for people who are starting out in the space? And I know I said I always tell people to go to Coinbase, but it's getting a little bit more complicated, but it's kind of really easy to navigate and has an easy user interface. I'm curious what the panel thinks. I mean, we're now hearing about all of these wallets for beginners. Where do they start? Should they head to blockchain.com?
They should make their own wallet.
Shouldn't. Their own wallet. I mean, okay, here are the problems with blockchain.com. And it's probably why I lost access to my funds. You have a beginner and you're like, hey, self-custody things, we're going to give you the thing. They lose it invariably. They don't understand the security of these things. So honestly, I think beginners do well to get involved with custodial services. I know that's taboo in the crypto space, but it's you got to think, who is your crypto at biggest risk of? Is it the state stealing it? Is it the bank stealing it and seizing it? Or is it you losing your key? If you haven't got good password management, maybe learn that before you take the plunge and start custodying your own assets. I think that's a big thing to keep in mind, but maybe other people have another take.
Yeah, I think that's really a great place to start, is just have an accurate self-assessment of yourself before engaging with any of these things. And we talk about it in terms of privacy tech and others, just know what your risk profile is and know what you're most worried about and kind of act accordingly in that way. I will say too, because blockchain.com has been around for so long, I've seen reports and I've interviewed people who have been directed to move their funds from one custodial wallet service to blockchain.com, and they end up actually losing some of those funds by nature of malware, their account compromises from their own devices or stuff like that. So there are risks, and because they've been around for so long and have such a high profile, the blockchain.com domain in itself imbues a kind of large scale legitimacy. So just be on the lookout for that too. If somebody's soliciting you to say, hey, move your wallets from this to this place, and I can help you and promise a return for funds, that's probably not something you should do. So when looking at any of these huge crypto native companies with high profiles, just be wary when people are trying to direct you towards it for some promise of return, I think is another thing worth mentioning here.
Absolutely. Well, we're going to take a break now, but coming up after the break, Serena Williams causes a racket and serves up a crypto play. Zing! All right, coming up after, no more puns, I swear, coming up after the break.
Hello, and welcome back to The Hash, where we bring you the latest in crypto culture and serve you a good pun every now and again. All right, so Bitcoin rewards company Lolli has raised a $5 million round featuring Serena Williams' fund, Serena Ventures. Now, Lolli offers an average of, I believe it's about 7% Bitcoin back rewards at retailers in the US. And to date, retail users have earned more than $3 million in Bitcoin rewards. So we actually don't have Lolli in Canada, so I've never used it. Has anyone on the panel used Lolli?
Yeah, I downloaded it a couple of years ago. I don't like trash talking people because I haven't used it in a couple of years. But I wasn't that impressed because I'd go on these sites. I think that they were sites where I'd get cash back and then like nothing happened. So I gave up on it after a few months. I'm like, I'm not keeping this plug in to like, there are other cashback rewards programs out there. I have a question about how Lolli gives back their funds. I presume they put it in a custodial wallet and then you can take it out in one big lump sum. Otherwise, I mean, it would get pretty expensive pretty fast if you're buying things getting like 7% back in Bitcoin. Like you're not going to get UTXOs that are over $20, so they're kind of going to be useless. So I'm presuming it's done in a lump sum. Is that right? Will, do you know that?
Yeah, I can take that. They also have this new fancy app you can earn Bitcoin back on.
Not sponsored.
Not sponsored, but
True.
I don't think they've even like announced that yet. So alpha leak there for you guys. Yeah, so it's like a 90-day service basically. So like if you go on Amazon, or I don't know who their partner's on, but they have like 1,000 different partners like pets.com, stuff like that. Mm-hmm. So if you go on there and get your Bitcoin back, it goes into your Lolli wallet for 90 days. And then after 90 days, you can withdraw it, because there's like that period with cash back for a company anyways, where if you're going to return whatever your chew toy you bought for your dog, then they would need to like resettle how much they gave you in terms of Bitcoin or in terms of cash. So that's part of it. And then also to what you're saying, Naomi, like if you're only getting basically what equivalates to dust for Bitcoin, like not enough Bitcoin to pay for the transaction fee, it's not like a super great method to like earn Bitcoin back. Like there's better ways of doing it. But I don't know a ton of how they are changing with Bitcoin going up and fees going up. I'm sure that's something that they're going to have to address.
Yeah,
and I mean, they did all this
that,
before.
So go ahead, Ben.
I was just going to say, they've been around for years. So they were here, prior, and they've had to deal with these increases over time. So that's something they've seen and have some experience in dealing with. To me, I thought this investment round and raise made a lot of sense in some ways. Alex Ohanian, one of the co-founders of Reddit, 776 Ventures, they got in on this and led the round. And so that's somebody that knows about crypto in a lot of ways. Reddit is a huge conversation place for this. So in that regard, I think that this just kind of makes all the sense in the world. Plus, it's like an easy way for people to kind of dip their toes into this. Jen, we talk about this often, like the educational purposes, or what's the value add? Like, what is the reason to get into crypto in the first place? So this is kind of a model that consumers are somewhat familiar with. There's other things like Honey and things that do this with fiat for the most part. So this is kind of a model that people might be attracted to and might be an initial kind of on-ramp for them.
Yeah, I think you're right. And go ahead, Jen.
Go for it. I was just going to say it's interesting, Ben, that Ben brings up the educational point. I believe they found in this report that not a lot of people see themselves as investors, but everyone shops. So it's a really easy on-ramp for people who have heard about Bitcoin, maybe want to dabble in it, and so they can, get some Bitcoin back as rewards when they're shopping, and then maybe graduate from there. But Naomi, I know you wanted to add on to that.
No, I think I was going to say what you were going to say, Jen. I think that on-ramp is great. And also, if you look at the influencers that they've got involved in previous rounds as well. So we've got Ashton Kutcher, we've got Michelle Phan, we've got Philip DeFranco, Casey Neistat. So there are all of these huge names. So if they are trying to get a mainstream audience and get them involved, it's really smart play getting all these big names involved. I will say that if you're not new to the space and you already use crypto, Lolli may not be the best platform for you. As I mentioned, Purse.io, like you may get 7% back if you use fiat currency, and then you get 7% back in Bitcoin. Purse.io, you can spend Bitcoin or Bitcoin Cash, and you can get up to like 37% back. So you save 37% on your transactions buying everything from Amazon. So there are definitely cool tools out there. They may not have Michelle Phan repping them, or Casey Neistat, Phil DeFranco, all these awesome influencers, but they're pretty cool tools, and I would encourage people to check them out.
Yeah, to that last point, I think it's interesting looking at like venture capital to see some some firms, like, it's in their playbook to get more like these celebrity backers as opposed to people who can really like dig into the code. And just, I think it comes down to like what your product is. So for example, Paradigm is a big investor in Uniswap, and Paradigm also helped Uniswap build the latest version of their exchange, which they launched yesterday. Like, they are very deep in the protocol and in the tech. But when you see something like Lolli, you kind of have people like Ashton Kutcher who are getting involved. And they're just using their name to kind of make the whole thing big, right? So that's kind of an interesting standpoint from a venture capital.
That makes me trust it less, honestly. Yeah, like when we see the huge celebrity raises, and maybe this is just my associations with like ICOs and the way that, you know, celebs got paid to like pump these things up. Like, I'm really interested when you see some of these big players, some of these, you know, more, I want to, maybe not technically savvy, but technically involved VC firms get behind things, and the ones that do it quietly as well, the ones that don't feel a need to like, you know, send out a huge splashy press release or something, because that shows, you know, in my mind, that they're really there for the long haul. And that's what makes me interested in those areas.
And I'm pretty sure this is actually the first time that Serena Williams is getting back into crypto investing, at least in the firms, since she apparently got out of her Coinbase position. She was one of the earlier investors in Coinbase, but I think mid last year, she, while Coinbase's controversy over their position on employee activism was going about, she removed Coinbase from Serena Ventures' website. And so that was read in the press as indication that she had divested her position. And this appears to be the first time she's jumping back in since then. So I'm wondering what drove her to jump back into the crypto space now. What is special about Lolli in particular?
Well, Danny, she did say in a statement that she hopes that platforms like this will help people achieve financial freedom because it gives them access to Bitcoin. I mean, coming off what we were saying at the beginning of the segment, that people are essentially getting dust. Do you think that is a fair read of this? Can apps like this really help people achieve financial freedom?
I'm not so sure. I mean, I think that it can help some people make the most of their money, but I think that we overhype the financial freedom aspect of all these platforms perhaps a little too much.
All right. So speaking of influencers, yeah. So we talked yesterday about BitClout, the sort of controversial blockchain-based social media network that was importing a bunch of Twitter profiles and, you know, kind of using coins traded in them to try and attract people to buy into the platform. Well, we were talking about some of the potential legal issues that might arise, and it seems that that has already happened. Anderson Kill lawyers that were tweeting about this yesterday have now filed a cease and desist on behalf of Brandon Curtis, the product lead for decentralized token exchange Radar Relay, against Nader Al-Naji, who is the alleged founder of BitClout. And they're claiming a couple of different violations of law. First of which is California Civil Code Section 3344, which protects against an individual's right to profit from the commercial value of his or her own identity established throughout the U.S. And then also the California Consumer Privacy Act, which recently went into effect. So we'll get into some of the nitty-gritty details there. But, you know, we talked about this potentially being an issue yesterday. Now it's a real issue. Danny, what's your kind of initial reaction to these developments?
Yeah, I mean, going into this story, I was thinking, well, when we put our information online, we can't really expect any degree of privacy. It's out there. Do we own it? Twitter probably owns it. But the more I'm reading about the law surrounding this space, it does appear that there could be a very strong legal case against BitClout for basically monetizing someone's identity online without their consent. And the important bit is that they're listing people on the platform before they've even permitted BitClout to do so. So that could end up being a very thorny legal issue that they've run into, and as well as all the VCs that have put all this money into what a lot of people, including some backers, have said is a Ponzi-like scheme.
I was really interested in the penalty, Ben. The article said that the damages could be $750 or determined damages. And I'm like, I don't know if you know, how would those damages be calculated? Because $750 doesn't sound like a lot. And is this really going to deter BitClout from doing what they're trying to do?
Yeah, it's a little unclear. Those damages get sussed out in legal cases, and there has to be a lot more information involved in it. I would imagine that they could potentially, and I'm not a lawyer, let's be very clear, potentially be sort of the amount that BitClout is making off these people's identities. Because the idea was that, if you, and we spoke about it yesterday, but like, if you kind of buy into these social tokens on BitClout, like a percentage of that is kind of stashed for the equivalent of the Twitter account or something like that. But a percentage of that is also goes towards BitClout. So that's the issue here, is that, they're kind of using people's identities and using people's, social media followings and others to say like, oh, hey, come buy into this person if you think they're influential. But the people who they're asking people to buy into didn't even agree to be on this platform. And Preston J. Byrne, who was a lawyer who filed this as well and is also a partner in Anderson Kill, he found out that his profile has been taken down, which also led to questions around how decentralized this platform actually is, because as a model of decentralization, that shouldn't be able to be done. But after he sent, some tweets kind of saying to Anadir saying, take this down, it was done so. So there's a lot of questions that are going to spill out to this. And I feel fairly confident that some of these VC firms behind BitClout are not happy that this is the way that it's sort of entering into the social media space. But Will, I see you nodding. What have you got here?
Oh, what do I got? I think it's definitely interesting to see like the clash of VCs and kind of the law boys out there. I think that a lot of the venture capital folk can be the law boys. The venture capital folk can be like pretty aggressive with some of these ideas, but they, in practice, I think you got to step back and think about like, is this really a good idea? Because you do need to have people's permission to use their identities online. You can't just throw it up, and you certainly can't start monetizing off of someone else's identity. That is just like not going to fly. I think there's plenty of examples in the past of that not working as well. So definitely an interesting and bold move for them, just like launch this platform and see what happens. It doesn't look like it's going to go well. I think the larger story here may be just that there's a lot of bigger VC firms and actual like large crypto companies behind BitClout, including like DCG and Coinbase. And I think even Union Square Ventures, which is like, what were they thinking, or what were they pitched on this? Mm-hmm. Like, was the pitch different from what was actually implemented? And what is their, like, are they going to be held accountable in the same way that the firm that launched BitClout was? Yeah, lots of questions for sure.
Yep. Naomi,
yeah, one thing I'll add about the decentralization versus centralization aspect of it. Obviously, when you have a website, that's a centralized aspect of it. So I think it'd be very easy for them to remove someone from a website, but whether or not they actually remove the token from the blockchain is another question. I'm not actually sure about that. And then in terms of, the idea that when you put your identity out there and you put your information out there, it's kind of fair game. Anyone can use these things. Information that you're making public becomes public. And it's interesting that when you have things like SLP tokens, for example, there are so many people who've created coins that are like Naomi coin, crazy redhead coin. Like they'll do these things. They will monetize you, but they're worthless. No one uses them, but they use it as these things to like send and spam like your memo.cash account or whatever. But people are creating coins all the time because it's super easy to mint these things. But suddenly you have this big player that has a lot of VC money behind it, and they try to do this, and everyone's like, this is a target.
States. And so how this plays out and how this law gets utilized could be a data point to look at in terms of how other states might start implementing their own laws. But, Danny, we were talking about companies going public earlier. I hear you got another one for us?
Yes, and we were also talking about VC-backed companies monetizing things that might not be monetizable or that people might find not so savory to be monetized. And that's Robinhood, of course, who monetize payment for order flow. Robinhood yesterday announced that it has filed confidentially for an IPO, which is essentially getting the ball formally rolling towards a debut, I believe, on the NASDAQ stock exchange. And this is a pretty monumental movement by a company that's been kind of cornering the market on retail trading, especially among millennials, for a while now. I think they've got 13 million users and a whole lot of money backing them. But I'm wondering, you guys, do you think that now is the best time for Robinhood to be pursuing a public offering? Like they've just gotten drubbed in the press and in Congress over the GameStop fallout. Of course, they've got plenty of money behind them and they've got plenty of momentum. but is this the best time to try to translate their successes into a debut on the public markets? Will, what do you think?
Actually, it's not. Go ahead, Will.
Go ahead.
Naomi.
No, Naomi, you got this. You jumped at the...
So I was just going to say, so we've had all this controversy, but apparently January was a near record month for Robinhood app downloads. So despite this controversy and being in the press and having dragged before Congress and giving testimonies, it seems that users are like, actually, they provide a service that I find valuable. I'm still going to use their product. So if that's the case, then it's probably a really strong time for them to IPO, especially given that they do people access to different financial tools that are really in the press and in people's mindset right now. People want to be part of this. It's part of the zeitgeist. And so, yeah, perhaps now isn't a bad time. And it's interesting, like it does suggest a certain amount of confidence in their business model, maybe even more confidence than we would have seen otherwise, because despite all the bad press, you'd think their mindset would be like, let's hold off. The fact that they've just gone ahead anyway suggests that maybe they have some things up their sleeve as well, and they're pretty confident. But Will, what are your thoughts?
I think there's never a bad time to make money. That's a professional opinion that you can take with you the rest of your life.
Taking notes.
But it's not investment advice.
Yes, this is not. We are not lawyers, and this is not investment advice.
I mean, think about it. The IPO market has been crazy. I mean, what has been in the headline but SPACs all year long, and Robinhood would be insane to stop their IPO process just because of some bad headlines. And I think a lot of people came out of this process and said, like, yeah, I don't love Robinhood, but I use it. And they're going to keep using it, and it's not going to change. I also, what does everyone think about high frequency trading? I want to see. That's not really what we're supposed to talk about here with this headline, but I'm interested in that.
Did you just change topics? You're like, what does everyone think about yogurt?
Will's done with this topic.
I mean, before we jump into that, I want to jump in briefly here and just say, this is kind of an example of maybe all press is good press. I wonder how many people didn't really know about Robinhood, but then heard about people making a killing on GameStop, and now the rights to this story have been bought 3 times already, and so they said, hey, okay, I might check this out.
What millennial only heard about Robinhood by watching C-SPAN and seeing the Congress people going after it? That's what I want to know. Me, they are not you, but they are out there somewhere. I mean, maybe it's the grandmothers getting off of their E-Trades and moving over to Robinhood because they like the competitor.
I mean, that's the market they're trying to corner here, right? No, and I think that it shows that, was it enough for people to leave the platform? And it seems like it's really not. But additionally, they're really thinking, and we've reported on this, right? And Danny, correct me if I'm wrong here, but they're really trying to expand their crypto offerings. Potentially, they're hiring a lot for that side in particular. So I wonder how much they're also banking on that being additional value add in the future.
Yeah, and I guess in the terms of the regulatory perspective, I'm wondering if that could throw a wrench in the process, because they did just, I believe, announce that they were going to let people take their crypto off platform. If anyone knows otherwise, please correct me if I'm wrong, but taking the crypto off platform for the first time, which could introduce a whole bunch of regulatory concerns that they didn't face with their walled garden. Jen, do you have any thoughts on that?
Well, speaking of the law, what was interesting to me about this is they have a lot of ongoing lawsuits right now, and I don't know how that would affect their IPO. I don't know, Danny or Ben, if you have more information on that, but could this be why they've kept it private? Oh, you mean with filing it confidentially? Mm-hmm. I think that's more of just a small regulatory distinction. I don't know if it's because they did, after the Bloomberg report, come out with a statement confirming that they had done this. So it's not so much this is a secret, we don't want anyone to know, that it's just we haven't put our filing in the public space just yet.
And I think they're honestly not worried about those. And they're not worried about those lawsuits for the most part. I think that their messaging around what happened with GameStop was absolutely awful. But in reality, they had to get more cash to be able to, price in these trades that were happening at such a high frequency. So it wasn't like they were doing something, seemingly, from my understanding, it doesn't seem like they were doing anything illegal. It was that, they had to do this because they did not have enough cash on hand to deal with the frequency of what was going on. And so it's really just a misconception around the messaging and also misconception about like how these financial plumbing works. Like we've talked about this before, like this was really eye-opening for a lot of people about how little control they have over their finances in this instance. So to me, it's more of a messaging issue than a legal issue. And I don't think ultimately might have a huge impact on their IPO.
Yeah, it was the people who were providing capital to the platform. They came to an agreement with them and said, listen, we can't provide the amount of capital that you need us to provide. An alternative is that we will halt trading of this particular thing in the meantime and provide like half the amount of capital. So it's like, it just goes back to show you that like the infrastructure of the traditional financial system is what's kind of the issue here. And Robinhood is just kind of part of that. But that is the hash for today, everyone. But make sure you stick around on CoinDesk TV. We have at 3 p.m. all about Bitcoin with Christine Lee. My name is Naomi, and we have Ben Powers, Jen Sanasie, Will Foxley, and Danny Nelson on the show. We'll be back here tomorrow at 12. Catch you then.
See you then.
See ya.